A lot of things happened. I lost about $20 million.
Okay.
During the COVID time.
That's a lot of money.
That's a lot of money. That's a lot of money.
That's a game you're playing. So, what's the biggest money you've made with gold so far in your entire 10-year trading career?
1M.
1 million.
1M, yes.
Okay.
Fundamental analysis doesn't necessarily change market direction. It causes spike and it causes momentum persistence or volatility surge.
Hello everyone, welcome to another episode of Capital Conversations. Today we bring you episode 4 of this program. Before we start this episode, I would like to remind you to like and share this program for more content like this. We have ForexUgyn on the show. Welcome, bro.
Thank you so much.
Let's quickly go straight to business. So walk me through your journey through forex market and how it started and how the entire journey have been so far.
Forex has been a success, but before a success is a success, there is always a storm before a success. I remember that I completed my university degree. I realized I wasn't getting a job.
When did you complete?
I completed around 2011.
2011.
I completed my university degree. So I realized that's been long. And I realized that no, I wasn't getting a job. So what do? I need to search for what can put food on the table. So I decided to embark on this journey where I could make it. So I got a light that I could rely on, that is forex trading, that is chart reading. Let me put the chart reading. There's a lot of misconception about chart reading and forex trading, but let me put it this way, chart reading. So I happened to chance on chart reading. And it hasn't been an easy journey. Just like a baby starting crawling, it will definitely grow. Yeah. I started my journey crawling as a baby trader, UB, and I grew up. I became an intermediate.
How long have you been in the forex market?
I've been in the market. This next year will be my 11th year.
Okay, so 10 years basically.
10 years basically.
Okay.
Yeah, 10 years basically. It's been a success for me. During the COVID, a lot of things happened. I lost about $20 million.
Okay.
During the COVID time.
That's a lot of money.
That's a lot of money. That's a lot of money.
That's a game you're playing. So
exactly. It was the emergence of the COVID, and I had to lose a lot of money, and I had to start from scratch
again.
Yeah, that was when I, realized I needed to get on my toes.
That might have been horrible, I think.
Very horrible. I got on my toes and.
We'll come back to the details of how it happened. For now, let's start from the basics. When you started learning how to trade, or when you entered into the forex market, what was your first successful trade and how did that shape your trading approach?
I realized that the market was not a market, but the market was myself.
Okay.
So how do I do that? I realized that there are a lot of ingenuity, there are a lot of things that I need to activate within myself. Okay. I don't need to be greedy. I need to work on my own emotions as well. So I embarked on a journey to learn more on the psychology of trading. I learned how I can be able to control my emotions, how I can be able to use or utilize the capital which is not attached to my emotions.
That's quite interesting. Walk me through your primary trading strategy.
I don't believe in a static strategy. I don't believe in the strategy people call status soup, strategy, and all of that. You see, there is nothing like a static strategy that works. Yeah. But what works is your own ability to adjust to change in the market.
So, like you said, you don't believe in the idea of having a static strategy like a lot of people do out there.
Doesn't work.
That we meet people, or you meet people and people ask you the kind of strategy that they're using and all of that. Unfortunately, you are not a person who actually believes in all these things because you believe in the dynamism of the market. That the market is always dynamic, the market is never constant. So you need to always undergo a revolutionary process that respond to the changes that the market actually brings. That's fair enough. What's your favorite instrument in the market do you like trading?
That's a very good question. I've traded a lot of instruments. I've traded currency, traded stocks, traded commodity. But my favorite pair or my favorite instrument in the market is gold. Okay. Because gold is responsive to average market volatility and liquidity. Okay. So when you talk about trading gold, gold is not too highly volatile, it's not low volatile, but it is within the range of capacity of volatility and liquidity. Okay. Yes. So I normally choose gold, and that is what I trade.
What actually triggered you to settle on gold? Because I know that there are a lot of instruments in the market. It might be quite interesting for the viewers out there to be curious about how this guy settled on gold. How did you settle on gold?
Gold is responsive to volatility and liquidity. Not too high liquidity, not too low liquidity, but it is within the average professional trading style, my professional trading style.
What's the biggest money you've made with gold so far in your entire 10-year trading career?
1M.
1 million, right?
1M, yes.
Okay.
I was $10,000 to 1M in an hour.
Oh wow. The highest amount of money you've made from gold in a particular trading day is $1 million.
1M,
right?
yeah. $10,000 to 1M.
Well, that's quite interesting.
Yeah.
I heard these stories from a couple of people or from a couple of online platforms.
Okay.
That there was a time that you grew an account from $10,000 to about $3 million, right?
Exactly.
In a year.
Exactly.
And when I heard that story, I was actually quite curious, and it was one of the reasons why I called you on this show, because I really wanted to know how this happened and how you were able to do it. Because there is somebody out there who's asking, how can a person build a $10,000 account, maybe a $3 million account in a year? Today he's here and he's going to show us how he was able to do it, so that if there is anything that we can take from it, and for us to also fund our account that way, to be able to trade that way, then we'll pick it up. So walk me through how you're able to build a $10,000 account to a $3 million account in a year.
I always tell people that no matter how much capital you have, you need to have something to risk. But do not risk your capital, but risk your profit. Okay. So I had a $10,000, and I happened to grow the $10,000 in an hour to $50,000. So what I did was I divided the $50,000 into two. Okay. So I risked $25,000 in one trade, because I knew definitely that was a spot zone. Waiting for about 2 weeks for my market to get to exactly that zone. The moment the market gets to that zone, I took the ignition lighted. Okay.
Profit you made, you divided into two, you risk half of the profit.
Yes.
When the one you made, you divided into two, you risk half of it.
Exactly.
The one you made, that's basically how it went throughout the entire year.
It went through for me.
So you realize that the $10,000 has been grown to $3 million in a year.
Exactly.
That's quite interesting. Fast forward, in the market, we all know that we have different types of analysis.
Exactly.
Basically, three types of analysis: fundamental, technicals, and sentimental analysis. In your personal experience in the market, which of these three types of analysis do you really believe in, and do you actually rely on in making your trading decisions in the market?
All the three types of analysis work, but they have a support level, and the pivot point is all centered on the technical analysis. Fundamental analysis doesn't necessarily change market direction. It causes spike and it causes momentum persistence or volatility surge. Okay, but it doesn't necessarily change market direction. Sentimental is all about the risk and reward psychology of trading, and so I base, because before something happens in the market, the technical always tells you first. Okay.
Harmonics was said on the show the last time that he came that when you take these three types of analysis into consideration, whilst the technical traders are arguing with the fundamental traders, the sentimental traders will be sitting on the sideline looking at them and laughing at them. So I also agree. I have this concept that I believe actually in both the technicals and the fundamentals, but in different perspectives. That the fundamentals give the market direction, while the technicals give the market structure. Right? So, like you said about the spikes and the momentums and all of that, whenever a news event hits the market, we see all the spikes and we see all the crazy volatility that goes on in the market. But as soon as maybe they hit some sort of key point or something like that, that point reacts to what price is doing. So it all boils down to what we are saying now, that the fundamentals actually sometimes move the market, but the technicals that gives the market a shape. Yeah, so I think I agree with you on that one as well. So back into the market again, we are still inside the market. What indicators do you mostly rely on? If you like indicators, what indicators do you mostly rely on, or you don't believe in indicators at all? In my situation, I don't believe in indicators. So tell me your opinion about indicators as well.
Indicator things not to be relied on,
Okay.
because they are responsive to networks. They lag along the line.
Okay.
But in our trading journey, basically in the infancy level of our trading, we've been using indicator for a while until you grow up and you realize that no, you are just chasing after the whirlwind.
Yeah.
You understand? So I don't believe in indicators. I don't use indicators because I've grown past that level. So what I consider are the key levels on the market and changes in market conditions. When there are changes in market conditions, I look at those key levels that I'm supposed to. That price will definitely react.
Okay.
Those levels that markets will reach and change, those are the levels that I look at. Right. I don't look at how my indicator will cross each other and will give me a buy and sell zones, or will tell me that there's a breakout. No, I don't do that.
Okay.
So what I normally consider are my key levels. There are key levels that I look at on the market.
Okay.
There are key levels that the market, no matter what, the market will definitely react on those key levels.
Yeah.
So I look at those key levels on the market.
Okay.
Yeah.
Okay, so that's basically similar to the kind of belief that I have regarding indicators. We are coming back to risk management, right? In trading, this is a very important concept that new traders out there fall victim to. Walk me through your approach. How do you approach risk management in your trading?
I make sure that whenever I'm going to trade, I look at my risk appetite or my risk threshold. And I make sure that my risk threshold is within the capacity of 1 to 2% of my trading capital. That is the standard risk management strategy that I use in the market.
Okay.
So, but when it comes to ways that I'm supposed to go on a higher risk, that is when I look to divide my profit into two, then I risk half of my profit.
Okay.
That is when I'm very sure that the market is going to go, although there is no specific guarantee, but there is a high probability chance for us sometimes, you understand, but there's no specific guarantee of 100%. But sometimes there is a chance of a 90% chance.
Yeah.
So when I get that chance, I risk half of my capital, and it doesn't normally come in a day, sometimes in 2 weeks, or sometimes once in a month.
Okay.
So when it touches that zone, I risk about half of my profit.
Okay.
Yeah.
Okay, I see. So we all know the assertion in the market that that is the mainstream assertion or the conventional wisdom in the market,
exactly,
that you need to risk 1% or 2% on every single trade, regardless of the account that you own. Exactly. So on the average, how many percent do you risk on every trade on the average?
I risk between 1 to 2% of my capital.
Okay.
On a trade.
On each trade.
Exactly.
Okay.
On entry. It means that when I reach 2%, it means that I have 50 times to enter a trade.
Yeah.
You understand?
Mm-hmm.
So I have a 50 chances to still enter a trade. So I risk on the highest, on the average of about 2%
per trade.
Well,
that's quite that falls quite within the mainstream advice or the mainstream figure.
Exactly.
Yeah.
Exactly.
Okay. Like I said, majority of you will be trading $100 accounts, and you will be opening 0.50, 0.40 lot sizes. Yeah. So now you've heard what we are saying here. Except that you want to buy a Lambo tomorrow, but I can assure you that you can't buy a Lambo tomorrow with a $100 account. So let's go on. We've talked about how you approach your risk management analysis in the market. Also, try to walk me through the strategy you use for handling losses and drawdown to your account. When your account goes into losses and drawdown, what strategy do you use to handle these sort of very painful experiences and procedures in the market?
Okay, I always tell people that, your emotions are directly connected to the risks that you take.
Okay.
When you are trading with an account, that is when you are taking a risk which is bigger than your normal intuitive risk level, your emotions heighten, and that is wrong. You are supposed to use a risk level which doesn't move your emotions, or which doesn't agitate your emotion level, which doesn't ignite your emotion level. The moment you realize that your emotion level are being ignited or being agitated, it means that you are doing the wrong thing. So you don't use those type of huge risk level, you understand?
Okay.
So when my account is going into drawdown, what I normally do is that I make sure that my stop loss zone is always active.
Okay.
And I don't move my stop loss. I make sure my stop loss is always constant on the zone. Okay? Because I believe that the moment it touches my stop loss, it means that the market is going the opposite way. Okay? When the market doesn't touch my stop loss, when the market touches my stop loss to 1 pip, it means the market is going the opposite way. Okay? It means probably I got the direction wrong. When I get 2 trades wrong, it means that I've gotten the direction wrong. Right? The moment you get a direction wrong in the market, it means that your analysis is wrong.
Right. So I see.
Yeah.
We have people, for instance, myself. I will use myself for an experience, with a personal experience.
Yeah.
During COVID.
Yeah.
During COVID time, I remember, it wasn't COVID. I think it was the Russian-Ukraine war.
Exactly.
That was 2022.
Yeah.
On the eve of the night that President Putin announced the special military operation, that actually started the war. We all saw what the market did, the response that we had in the market. Yeah. And me personally, my approach to handling losses and drawdowns in the market is this. Anytime I go through some serious drawdowns or some serious losses in the market that actually violate my trading plan and everything, normally I like taking a break, quite some break from the market. Okay. To maybe go on a trip, go somewhere to try to in order not to revenge the market. Exactly. To go and just refresh myself and my mind and just go and get my mind in that shape. Exactly. And I remember that time during the special military operation, during the announcement of that night, by the time I woke up in the morning, my account was down about $120,000. Okay. Right? And that time I had no choice than to take my losses.
It was a buy.
Yes. Because at that time I was actually trading the Asian session when I fell asleep. And I had no stop losses on. So by the time I woke up, it was very terrible. And I had this guy in South Africa, who is a fund manager as well. I spoke to him in the morning and said, the same thing happened to him, and he had lost like $2.5 million by the time he woke up. So we actually decided, okay, let's just take some time off the market. Exactly. So me personally, I just booked a trip, to just go far away from the market for, I think I spent like 5 days to a week, outside the market, somewhere without my laptop, with all the trading apps actually getting deleted from my phone, because I didn't want to have anything to do with trading for that very moment. So I just went out there to just get my brain in shape, reset my mind, and got back. But that approach works very well for me, because when I got back from that trip, it took me like 3 weeks for me to recover all the money that I lost during that night. Okay. So that is why I was asking you the approach that you use in handling these kind of situations. When you fail, because I've told my story to a lot of people, and probably people have learned it. A lot of people have learned this thing out there. Anytime you go into huge losses, you will need to maybe take some break of the market to go somewhere. Even if you don't have money to go on any trip, maybe just stay away from the market, stay away from anything trading, to just go and refresh yourself, try to forget about whatever happened to you, maybe for some time, then get back, so that you don't get on that revenge mode, to actually try to tackle the market. So that's why I asked that question.
Okay, how I heal myself is probably I do a playback.
Okay.
For me, what works for me, the moment I go on a vacation, I'm still thinking about what happened in the markets.
Okay.
It doesn't heal me. How I heal is to correct myself.
Okay.
That is how I heal. I feel fulfilled. I feel that I've been able to move to the next stage in life. So I get back to the markets. I don't trade, but I do a playback.
Okay.
Right. I do a playback to see what actually happened. That is what I do. Right. Yes, that is what exactly.
Okay.
That is how I heal.
So that's quite two different things, two different scenarios coming from two different types of personalities in the market. So that is what I keep saying every day. In the market, the problem is not the market, the problem is not the chart, the problem is always you.
Exactly.
If you can't build yourself to where you know your strength and your weaknesses as a person, you have no business succeeding in this game. So that's what you heard from him. Let's continue. Tackling the issues of what we have in the market now. Let's come back to the fundamental, the concept of this fundamental analysis thing. What major event or trend do you think will impact the forex market? We're actually trying to think in the future, right? Okay. Looking at the global geopolitical landscape that we have now. This year is an election year in the US. We have a whole lot of elections coming up in the European Union as well.
Yeah.
And we have all these geopolitical issues, the Russian-Ukraine war, the Israel-Palestine. Now we have Israel, Lebanon, Hezbollah in Lebanon, Iran, and the Middle East is, almost on the verge of catching fire.
Exactly.
So as a trader, that perfectly that all these geopolitical events actually affect global markets.
Exactly.
What are your projections and how are you preparing yourself in the event that there is a big escalation in the Middle East, or there is a big escalation maybe during the US election, or there is a big escalation between any of the global major economic powers that actually affect market? How are you planning, or how are you preparing in case of any of these events?
Okay. I'm not a purely fundamental person.
Okay.
I look at the fundamental side, but it is not what determines my market direction.
Okay.
No. What determines my market direction are the imprints of what I'm seeing, the key levels of what I'm seeing in the market. There are people investing in the market, and orders are being placed on specific prices on specific zones. And those orders will need to be executed. Okay. And I note those orders down. No matter what happens in the market, those orders will be executed. Okay. When gold is at 2300 and the banks have bought at a price, when market comes there, the banks will still buy. Okay. So I look at mostly the zones on the price level where there are confluence of orders, or there are a lot of orders. That is why I don't necessarily, although I look at the fundamental side, I look at what is happening to get a fair idea of maybe spikes or what might even happen in the future. But I probably base my analysis on purely the fundamental and the levels of where prices are, or where a lot of orders are, where the banks have placed their orders, where the hedge funds have placed their orders. I look at those key levels that there are orders. Those orders will need to be ignited and executed in the market. So that is what I look at.
Okay, so that's a different perspective as well. So in the sense, you are making us to believe that you are a purely technical trader and you don't really give much credence to fundamentals, which is totally acceptable. Because me personally, or me myself, I don't give that much regard to fundamentals as well. But I asked that question about the global geopolitical landscape because, whenever it's an election year in America, we know there are a lot of volatilities in the market, because a lot of speculations actually enters into the market here and there, up and down, and all of that. And it's a season that a lot of traders actually try to position themselves in different areas with their portfolios. Those who are traders, those who are investors, and those who actually have a long-term plan in investing in specific economies, right? Because if we look at the Japanese yen now, for the past three years, there has not been any useless major currency than Japanese yen for the past 3 years. And we can all attest to that, right? That for the past 3 years, the Japanese yen has been absolute shit, right? In the market, it has been in an utter downtrend for the past 3 years, and it is not just because of some technical levels getting broken. That is why the Japanese yen keeps falling like that. It is a purely political, or it's a purely economic reason, because the central banks are not doing their work well, and because the country's economy, and Japan is the third largest economy in the world.
Let me tell you one thing. One thing about the Japanese yen. The Japanese yen, the more their currency falls, the more their economy grows. In other regions, the more their currency grows, the more they attract investors.
Okay.
But in terms of the Japanese yen, it doesn't work like that. They put up policies, regulations to make sure that their currency drops. You understand?
Okay.
So that they can be able to attract certain incentives to boost their market momentum.
Okay.
You understand? Because the Japanese economy is mostly an export economy.
It's a production-driven economy.
It's a production-driven economy. They are industrialized economy. So they do not import. So they export. So when you are exporting, you can beat down your currency so that it would fix the payment of balance deficit.
Okay.
You understand? So that it will balance the trade.
I understand. Yeah.
When your economy is mostly importing economy, it's not an industrialized economy, you can work to rejuvenate your currency by beating it up.
I see.
Yeah, so that is why, so it is not a problem when the yen is falling. It is actually, to them, it's a good note to, because there are a lot of policies they can put in place for the yen to rise, because the yen is one of the biggest currencies in the world.
Okay.
So the yen is deliberate.
I see.
It's deliberate. So they set up bank policies and bank regulations to devalue their currency.
I see.
Yeah. So if you search history, and you realize the Japanese yen falls not because the economy is not good. No, it falls because they wanted to do balance of payment, balance trade. It's just to balance trade.
Okay.
Yes.
Okay. I see. So let's come back to account management, right?
Okay.
We all have professional traders out there managing big portfolios. The last episode I had somebody on who actually manages an $80 million portfolio. And these are stories of people who actually came from nothing, or came from doing a mere 9-to-5 job to actually landing these big portfolios.
Yeah.
So what is the biggest money you have attracted from investors to under your management since you started trading?
Okay, under my institution, I have a registered institution in
Okay.
Kenya and in Ghana as well.
Okay.
So we've had the opportunity to manage at least $50 million for a company on Wall Street.
Okay.
So currently we manage about $50 million. $50 million.
Okay.
For a company in my institution.
That's an institution.
Yes.
Okay.
For a company on Wall Street. Yes.
And how long has it been since you started managing for this company, and how is the general management going now? Like, how is the market treating you, the market treating the fund, and everything? Like, how is it going?
You know, we got this contract that is like 6 months ago from today's date. Yes, so we are giving ourselves for 1 year, and so far we've been able to get at least. They are not mostly pressured people. They are not putting pressure on you to make so much amount of money. Okay? They are just letting you make at least 20% per year. And looking at our capacity so far, we've been able to make at least 30% in 6 months.
Oh, that's good.
They are looking at 20% per year.
A year.
Because of the volume.
Because of the volume. Because I know a lot of banks have a yearly target of 25% and all like that.
Exactly. They are just looking at this 20% a year.
Oh, okay.
And we have made almost 30 to 40%.
And that is in just 6 months.
In just 6 months before already made that.
So basically you've reached your target, and the year we're still in the midway through the year.
Exactly.
How exciting can that be? You know, and sometimes these things actually happen. So in your institution, right?
Yeah.
You being a person who managed this big money,
okay,
who managed this big fund or big portfolio for such an enormous entity out there, do you have any academy, or do you have any courses that you sell to students? Do you have, or because maybe there might be someone out there listening to you who thinks, the knowledge that you are spitting, he would like to learn from you and all of this. So, do you have any academy? Do you have any, any training institution somewhere that you groom people, you groom traders, you teach people how to trade and all of that?
When I was growing up, and I used to call myself the return of Nkrumah. You know why I call myself the return of Nkrumah?
No.
I had a hot fire which burnt me,
okay,
and then the hot fire drew an African mark on my tummy.
Okay.
So I always tell myself that it is not a coincidence, it's a serendipity.
Okay.
You understand? So I have found myself on the realms of trying to help the people of Africa.
Okay.
Africa is a median age of 19 years. And when nothing is done, the youth will become a bomb.
Yeah.
Because in about 10 to 20 years time, the population of Africa will be bigger than half of the population of the world. So, and Africa is not an industrialized country, Africa is not an industrialized region, then how do you tackle that? So in my own light, or in my own capacity, I'm entering that with an educational system, whereby I'm creating a central system where people in Africa, the youth, can be able to learn on the financial markets. The moment you finish trading on the financial market, you get employed automatically by the system. And also, my academy is trying to make sure that they help people put food on the table. And so far, we've been able to go a long way, and we're trying to train at least 24 million people in Africa. We've started training people in South Africa, we've started training in Kenya, and in Ghana as well. We've trained about, let's say, 1,000 people already in Ghana. And so far, we've made an enormous impact in the lives of people. The average per capita income is less than $5 a day in Ghana. And we are trying to raise that standard through the financial markets. By letting people have at least $30 to $50 per day. And that has been in the light, and that has been in vogue, and we are making a headway so far in Africa. So I also would like to thank you for, making it a voice, by bringing me here and letting the world know that it is still possible, where there is no hope. There is hope, and I just want to thank you for that opportunity.
You're welcome.
Yeah.
We just believe, we just believe that we can actually also have the little impact that we can have on, the average guy on this continent, and everything that we've actually been taught. because we live in a system that we have enormously bad leadership, a high rate of unemployment, especially among the youth and all of that. So I think it's hard time that the youth of Africa actually rise up to start learning something, start learning high income or high value skills that they can actually use to take control of their own lives, regardless of whatever the politicians promise them and all of that. Because trust me, there is nothing no political party or no politician can actually do to help your life. They are only in for themselves. They just use you as a pawn, in the entire game of chess. So if you don't wake up and actually fight for yourself, at the end of the day, you're going to wake up and there is actually nothing for you to actually talk about in the end. So that's quite an interesting initiative that your organization or your institution is trying to partake in across Africa. So for the sake of time, let's come back to the industry that we are in. How do you see the industry, the forex industry in Ghana? How do you see it? What's your perception about all these things that is going on out there, concerning Ghana? Because I know you have been to South Africa and you know the kind of industry that is there, how rich these guys are and how united they are in trying to project the face of the industry to new heights. How do you see the industry that we have in Ghana?
In Ghana, the infrastructure framework is non-existent.
Okay.
Because there is no voice, and without voice, there is no brand.
Okay.
I would always say thank you once again for bringing a voice involved. You see, we do not have the necessary capacity to go out there and tell our people that, let's put this into action. Let's make this work. How do we make that work? How do they accept that? Are they ready and willing to accept that? They are not willing to accept it because we do not have the necessary brand. Okay. It is not branded. First of all, number one, we will need to brand it. We brand it as a way to solve an eminent problem in the country. After we give it that brand, then we bring that product out. Okay. After we bring the product out, then we find a way to communicate the idea to the people, to our leaders. Then they can be able to grant policies, grant regulations, and create the framework to make it work. Okay. Create the infrastructure framework to accommodate whatever products that we have.
But do you think among the traders that we have in Ghana, among the traders we have in this country, do you think there is that sort of unity among them for all these frameworks to efficiently function in the system? Because I know if there is no unity among the people involved in the industry, whatever frameworks that investors or whoever put in, if there is no unity among the participants in that industry, the framework that can't efficiently function. So do you think there is adequate unity in the industry for these frameworks you're talking about to actually be put in place?
I believe that there should be unity. Doesn't just come in a vacuum. There should be a step driven or an effort driven towards making unity happen. And how do we do that? Let us set up policies. Let us set up ideas, fund-driven ideas, boot camps, fun fairs, things that can make people come together, games, things that can make people come together one more time. When we set up those things, it can be a strategy to drive people together one more time. So if people come together, then we can be able to execute whatever idea that we are looking at. We can do Traders Connect. We can do Traders Game. We can do Traders Grill a barbecue. You know, in South Africa, they call it a braai. It's a way to bring people together. You do a grill, you invite your friends to come over to your house. You know, so I feel there should be a strategy to bring people together. Now, when people are fully brought under one specific umbrella, that is when we can be able to execute our strategies in a full capacity.
Okay.
Now, when we go directly to execute whatever strategy that we have, it wouldn't work.
Right.
Because strategy cannot be executed without a voice.
Right.
So let us set up fun games, boot camps, traders fun fairs. These are ways that we can be able to harmonize traders. This is your platform. It's a strategy to bring traders together. It's a strategy to elevate the voice of people. You understand?
Yeah.
Upcoming traders. Elevate the voice of the industry within this specific region. So what I'm trying to say is this. Let us set up strategies. On a weekend, we can go for a walk, traders walk. On a weekend, we can have a traders drink up. On a weekend, we can jog. On a weekend, we can do traders cleanup. So when we are exhibiting this to this capacity, a lot of traders would like to also come together and experience the jam to which we enjoy as well.
So can you say that these are the things that the South Africans and Nigerians are doing that is, you know, making them successful and well projected in the industry?
Yes.
That we are not doing.
Yes, exactly. These are things that they do.
I see.
You know, you don't bring people together by shouting for them to come together. No,
Yeah.
you don't do that.
Yeah.
You understand?
I see.
You look for a strategy to bring people together.
I see.
You know, when you want to make people drink, when you want to let the ants sip into the honey or the sugar, what do? Or you want to let the ants come together, what do? You put sugar down.
Yeah.
So sugar now becomes the bait
Yeah.
to which we can use to bring people together.
I see.
So there should be strategies that we can use to bring people together. You know,
I see.
we organize that, and you know, we find a way to bring people together. When we bring people together, now we are one voice.
Yeah.
When we are one, the voice becomes much more stronger.
Yeah.
Then we can be able to execute whatever strategy that we are looking for.
Yeah. Yeah, I think that's a nice idea. And like I said, one of the goals of this podcast is actually to bring, you know, exceptional unity in our industry in Ghana, to unite all the traders across Ghana and Africa. We are not here to support anybody above anybody. We are here to support ourselves, support our industry, and try to project the industry to higher heights. So as we are coming to just wrap up, we're about to just wrap up the conversation. If there is someone out there listening to you, and the person is a new trader wanting a little bit of advice from all this, you know, special knowledge and nuggets that you've spilled on this conversation tonight, what is your advice for new traders out there?
Trading is not a one-time game. It is an infinite open sea of mastery. You will need to work. You will need to work each and every day to master your strategy. Look to the mastery. Look at how best you can be able to gain mastery over the market. The market is yourself. The market is within you. So the best is to look into the market and gain mastery over your own self and your own soul.
It's been another exciting conversation, and you know, we've talked about a whole lot of things that if you are a new trader out there, I know you will fully be impacted about everything that we've talked about tonight on this conversation. Like all financial advisors, we are not here to give you financial advice. Everything that we talked about on this show is strictly for educational purposes only. Whatever decision that you make in your financial life, based on the knowledge or the information that we've shared here, you take 100% responsibility and risk for that. We don't advise you to do anything according to whatever we've said here. Any action that you take to act on your money you take 100% responsibility of that. We are only here to provide education and enlightenment to everybody out there, or to people who have the passion and the interest in delving into financial market trading and investing. Subscribe to the channel down there. Drop your comment down there. All the traders that you know, all the professional, the top traders around that you know that you want us to bring them on the show. Kindly drop them in the comment section over there. Share this video to your family and friends so that they can watch it and be impacted as well, because we would all love to be cruising the next 5 years in our Mercedes, in our Lambos, in our G-Wagons and all of that. That would be pretty exciting. So until we meet again next time, I wish you the best in your trading. I wish you much more profits, and I wish you the discipline and the patience to be able to maneuver your way through this market. See you soon. Thank you.